All right, everyone, I'm going to do this quick video just looking at gold because I want you guys to be aware of a key resistance level. So this is looking at technicals for what gold needs to get past for us to confirm that the bull market that gold is in right now is going to continue. All right, so look, we can see on a technical basis, gold has failed to get above this level around $2,000 an ounce going back to July 2020. We've had one bounce, we've had two bounces, and we've had three bounces. Okay. Now, as I've been showing you guys, you understand why gold's going up. The reason gold's going up is because interest rates on bonds are going down. So I showed you the relationship between the bond market and the gold market, okay? Whatever happens with bonds is going to affect what happens with gold's price. So, as I was showing you, if I take you back to looking at the US economy in 2022, because the Federal Reserve was having to raise interest rates because of the high inflation. So we know when the Fed started raising rates in March 2022, inflation was at 7.9%. All right, and they started raising rates in March 2022. That was the first rate hike to try to bring down that high inflation, right? And when the Fed started raising rates in March, all right, you can see here that interest rates on 10-year government bonds, so if you borrow money to the US government over 10 years, that really took off when interest rates started going up. Look, it was 1.69%. You can see it over here on the bottom right-hand side, 1.69%, and then look how aggressively it went up. But look at the right-hand side, how much gold went down at exactly the same time as interest rates go up. So if investors can buy government bonds that pay enough interest to protect them from inflation, they don't need to buy gold. Gold goes down, okay? But then look what happened. Interest rates on government bonds hit their peak in October. No surprise. Why? Because by October, look, inflation had fallen for 4 straight months. So investors realize, oh, okay, inflation is not going to go higher anymore. So interest rates are not going to go that much higher than they already are. That's why the 10-year government bond hit a peak. The interest rate in the 10-year government bond hit 4% and has gone down ever since. And look at the right-hand side. Since the interest rate has gone down, gold's price has gone up. And if that interest rate keeps going lower, gold's price keeps going higher. All right. And if I show you the correlation between the two throughout history, then it's going to show you how gold moves. Right. Look, let me take you over here and put the 10-year US government bond yield on top. Look at this inverse correlation. Look at the inverse. Look, when the interest rate goes down. So look, when this interest rate, this is a 10-year government bond we're looking at here, the interest rate on a 10-year government bond. When it goes down, look how much it goes down, and look at gold's price as it's going down. Gold's price is going up. Why? Because this interest rate falling basically means that this government bond is protecting investors less from inflation. The lower it falls, the higher gold's price goes up until the bond market bottoms. Now, interest rates stop going any lower, and look what happens to gold. It reaches its peak. Soon as the interest rates start to rise again, look at gold's price. It goes down. Okay, so the higher the interest rate goes up, the more gold's price falls. And then let's say we have a period where the interest rate suddenly starts to go down again. Look at gold at the top. It starts to go up. It's an inverse correlation. Okay, you're literally looking at what drives the gold market. All right. So here's a prime example of just how important this is, because as you see, as the interest rate keeps going up, right? As the interest keeps going up, look what happens to gold's price. It can't go any higher because now rates are going up. So investors are more comfortable buying government bonds than buying gold. Remember, government bonds are very safe investments. You're guaranteed basically not to lose your money. The government's going to pay you back your money and they're going to pay you interest, right? Gold's price, you can lose money. It can go down in value, okay? If you hold a bond until maturity, so let's say I buy a 10-year government bond and I hold it for 10 years, I'm going to get my money back plus interest. If I sell it before 10 years, well, the price of the bond may drop, so you may lose money on the price of the bond. That's why if you just basically buy a bond and hold it, you're safe, all right? So as interest rates go up, gold's price goes down. Okay, so look, you can see this is important. This is the inverse correlation between the two. So reason being I'm showing you this is because yesterday, as I was showing you the inflation data, right, which is key, we can see yesterday that the inflation numbers was showing that inflation is falling. Inflation went from 6% to 5%, but most importantly, the core inflation number didn't go down. It stayed at 5.6%, which is the forecast. So it went up by 0.1%, right? The point being is that, yes, core inflation is sticky, but they're expecting core inflation to go lower because the housing market, housing prices for rents it has a delay on the prices and it's starting to slow. And they're saying that when this starts to go lower, core inflation will come down. Okay. So if that does happen, perfect, because you know what's going to happen. The markets are already pricing in the central bank in the US to cut interest rates, as I showed you yesterday. And that's why the bond market, that's why the interest rate and bonds have been going lower. And the more inflation goes lower, the more the month-on-month numbers keep coming down, the more hopefully today we see producer prices come down. All right. So we got core PPI today. So producer prices. If the prices that companies are facing are going lower, they're then going to pass on those lower costs to consumers. So prices on the shop floor for goods and services will also go lower. That's good news. What would happen if that happens? The bond market will go lower because the market's already pricing rate hikes, and that's going to be the catalyst to get gold through this resistance level. All right, so we always have to match up technicals with fundamentals. We can't just look at technicals and not understand what the fuck's going on in the fundamental market. That's just gambling. That's just ridiculous. All right, so fundamentally, interest rates are driving the markets right now. And technically, there's certain key levels that will get broken when the fundamentals push price past those levels. That's what we have to look out for. But look, gold is back up today straight away and it's testing this level. It wants to get beyond this level. Hopefully the producer prices will give the markets the confidence that company prices are going lower. They'll pass that on to consumer prices going lower. Boom, we get an idea that inflation's on its way down. And hopefully that can be the rally in gold and we can make some money. All right, everyone. So short video, just breaking it down. I'm just watching it and I'm analyzing it. And hopefully this does give us a really, really good opportunity to catch the bull market in gold and make a lot of money. All right. Thank you, guys.